to let all the streaming platforms fix their latency issues.
Come on.
All right, we're live for another episode of The Weekly. It is Monday morning here in Japan, February 23rd. Bitcoin in free fall, dropping from $67,500 just a few hours ago to $64,500 over the last hour and a bit. David, what's happening?
Woo! We have had, roughly $230 million worth of leverage longs liquidated in the past 60 minutes, I believe, is the number being reported. I saw this
You
great...
call that a crash?
But I saw this great comment on that, which is from a TradFi person, which is Bitcoin and crypto has to be the only place where leverage learns no lessons. I do feel that has a lot of truth to it, right? Like, we're not exactly in a bull market right now, and yet more leverage to be wiped out, Graham. Feels like maybe people who are doing leverage longs should be careful right now. I know
Yeah,
that
well,
Go ahead.
go ahead. No, I was just gonna say. I mean, looking at the chart that you prepared here, right? If you're a leveraged uh, degen, you'd be like, "Oh, look at this. We got ourselves a little triangle forming. What do you call this symbol here?" So surely it's gonna break to the upside here, but in fact, it broke to the downside.
Yeah, exactly. So this is I put this in my newsletter on Friday, um, and you can see that we've been consolidating in a pretty tight range for more than 2 weeks, between 70,000 on the top and then 60,000 on the bottom, and it's kind of slowly been compressing. And then here, I think now we can say we've clearly broken to the downside, and these leverage longs have been wiped out. Um, I don't know. It
Well,
seems, yeah.
yeah, I mean, we need to, of course, ascribe some sort of reason. There has to be a narrative here. Why did Bitcoin break to the downside, not the upside? Um, you
Yeah,
could point to
um,
many things.
absolutely. And I think just looking at the state of the world and all the things, it would seem more likely that it would break to the downside right now than to the upside. So it doesn't really. Anyway, it just seems strange that you would be leveraged long right now. But let's talk about some of these reasons. The first, of course, you have all this tariff uncertainty coming out of the Trump administration. Tariff uncertainty as usual, right? You have the Supreme Court basically strike down the the tariffs as they were, and then instantly you had kind of a new regime of tariffs be reintroduced. So again, uncertainty. Uh, Obviously, that'll cause risk assets to sell off. You have um, a hot inflation print, weaker GDP, war imminent in Iran, which would ostensibly cause a spike in oil prices. Um, you have tech credit spreads increasing. And this is because of all the open claw SaaS apocalypse stuff for the past couple weeks that have caused tech to sell off pretty hard in traditional markets. And these traditionally parabolic sectors, tech, are at risk now. You have the fact that Bitcoin, I'm sure you saw this a lot the past couple weeks, Graham, this chart of how closely correlated Bitcoin is to the software sector in
Yeah.
TradFi. So if the software sector is not doing well, then you can infer that Bitcoin won't do well. I mean, that's the kind of what that chart is trying to imply. So all of this would point to the fact that maybe Bitcoin would break to the downside and not rally from here.
Okay. So we did get obviously a break to the downside here. Um, what's next? How much lower are we going? Nobody knows.
Nobody
But
knows. Yeah.
yeah, but I
What do you
mean,
think?
Jordy Visser, who the Bitcoin IPO moment guy, he has been amongst others pointing out the correlation between the SaaS companies and the Bitcoin price, and he's saying that once that correlation breaks, that's what he's looking for right now. He's looking for a breaking of that correlation. If Bitcoin falls less to a less extreme extent on these types of sell-offs than SaaS, or if it rises to a greater extent on any type of rebound. That's what he's looking for, a break of the correlation. So until that correlation breaks, the beatings will continue.
Yeah. That makes a lot of sense to me. I I think I think that just I think what you kind of just building on that, what you want to look for is this idea that Bitcoin leads to the downside and to the upside. So as soon as like you say, Bitcoin stops responding uh, as much to the downside, that's probably hinting that it's going to be close to done. The problem I see though is it can get a little reflexive, right? Like if TradFi markets start to sell off hard on Monday, U.S. time, that could cause Bitcoin to again then sell off even more. So again, it's the classic like catching a falling knife thing, right? Like I would be patient and kind of wait it out a bit more, but
Yeah,
or just hodl.
you did say, David, in your newsletter on Friday that you recommend sitting on your hands for the time being. Now that could be a bottom signal, so just a full dis- full disclosure.
Yeah, every everything could be a bottom signal, Graham.
All right, let's move on to some other stories besides just price and yeah, what could be causing this most recent crash in Bitcoin. Let's move on to some other stories for the week. So, one of the big ones over the past week here is that Nakamoto Inc. has made a pretty major restructuring, I guess you could call it. Basically, they Nakamoto, which of course is the company that yeah, it's a Bitcoin DAT, a digital asset treasury, effectively, kind of transitioning here now beyond just DAT by acquiring two other companies that are owned or founded by David Bailey, who is the CEO and chairman of Nakamoto. And those two other companies are BTC Inc., which is the publisher of Bitcoin Magazine and producer of the Bitcoin conferences, which, David, you'll be attending the Bitcoin conference in Vegas this year in April. Excited for that.
Yeah, it's gonna be fun.
Anyway, the other company is UTXO, which I'm not sure exactly what they do. Do you know what UTXO does? Capital management of some kind
Yeah, it's like
in.
a. I think it's basically like a hedge fund, as far as I understand it. So, um, crypto focused, Bitcoin focused. Woo, Bitcoin focused hedge fund. I think they are making investments in the Bitcoin ecosystem, things of that nature.
Okay, so the deal, which hasn't officially been signed yet, but there's no shareholder approval required, so it's very likely to go through. I'm not sure exactly what approvals are needed, but anyway, the deal calls for issuance of about 350 million Nakamoto shares. Now, those shares will be given to the new companies, right? That is like as payment for the acquisition, right? That the companies that Nakamoto is acquiring, so BTC Inc. and UTXO. And so critics have pointed out that this dilutes the shareholder value or share dilutes the shares of Nakamoto for existing shareholders. Supporters, on the other hand, argue that what is being created here is more of an integrated Bitcoin operating company that combines media reach, events revenue, and asset management. So, it turns Nakamoto into more of a profitable operating company that is ideally capable of regularly buying more Bitcoin, which
Yeah.
that was its original intention as a digital asset treasury to accumulate more Bitcoin. By the way, just before you jump in, David, just want to note that Nakamoto currently is trading at significantly below its assets under management. So they hold about 5,000 Bitcoin, which is valued at 300 between $300 and $400 million, but the current market cap of the company is only around like 100 or 150 million. So trading significantly below MNAV.
Yeah. I believe that at its height, it was trading 23x above MNAV, right? Like
Yeah, so
in the
they're
frenzy of
down.
last
They're
year. So
down something over 90% from the peak. Everyone knows, of course, the markets were extremely frothy at that time. Uh, Discerning investors here might be looking at this as a juicy time to get in.
yeah, I watched this unfold in real time basically last week, and it was interesting to see the initial reaction to this news was scam, scam, scam. This is BS. David Bailey is a scammer. And then to see kind of the more measured responses come out, and it really does seem like I can see why people think it's a little shady, right? You have a guy who's nominally in charge of one company, then buying some companies that he uh, co-founded and still nominally is in charge of, right? But when you get into the details, this was made clear from the beginning of Nakamoto, right? Like, so there was no surprises here, and the shareholders signed off on this when Nakamoto was incorporated, apparently, right? In the plan for Nakamoto, it was like, we are going to buy BTC Inc. and UTXO. This is part of the plan. Do you agree? And the shareholders said, yes, I agree. So there was no surprise, there's no shadiness in that regard. And then
There's
there
no
was like,
bait
I
and
think
switch.
there's no bait and switch, and there was no and there was talk of like, oh, you see, Nakamoto is buying buying this by issuing shares to these companies at a dollar, whatever, $1.12.
Yep.
This shows you that they're overpaying for BTC Inc. and UTXO, which is the exact opposite, right?
It's the
It's
exact opposite
basically,
of the reality.
yeah, it's basically like, it's in a way basically making a bet that Nakamoto is undervalued, and the companies that are acquired don't really break even until the share price triples, approximately. So this is kind of what you would want to happen, right?
This
Um,
is how you would structure it. This is the correct
yeah,
way to structure a
yeah,
purchase like
and
this.
I saw on the timeline some people saying basically the idea from the very beginning was a way to make Bitcoin Inc. and UTXO public, and in deep markets with deep liquidity, um, in a quick way, right? So you had this DAT, right? With, was it Kindly MD, um, being turned into Nakamoto, and then Nakamoto buying BTC Inc. and UTXO. This is kind of a quick, easy, fast way to make BTC Inc. and related companies public without going through a lot of other stuff. So again, it seems like they're kind of doing what they set out to do, and I think maybe the online mouth breathers got upset because there are different, like, maybe pieces that might look scammy, um, and that set their alarms off. But it doesn't seem like anything is the case.
Well, I mean, certainly anybody who bought Nakamoto in May and held it until now, or sold it at any point between then and now, is yeah, not too happy. So there's butthurt people out there.
Yeah, but who buys this at 23 times MNAV? I mean, really, what are
So
you
yeah,
doing?
they deserved it.
Come on, I don't know. It's crazy, crazy to me.
Um, all right, so moving on. Bitdeer. So Bitdeer is a Singapore-based miner. It's led by crypto veteran Jihan Wu, and they have been selling down their Bitcoin holdings. They sold most recently 943.1 Bitcoin from the reserves. This completes a full liquidation of their corporate treasury, and they are pivoting to a certain extent, it seems, towards AI, but also towards other infrastructure expansion in the Bitcoin space. So, just a few other details here. Let me see here. Yeah, basically, they're going to be putting money into AI data center build out and high performance computing, but also into ASIC mining rig development and just general corporate purchases. They're doing a bit of a financial restructuring, I think, with this sell off, as well as the issuing of some or some moving around of existing debt, the restructuring of their debt. So yeah, the stock is down 47% over the last 12 months. And this is not the first Bitcoin miner to be pivoting to a certain extent to AI, away from Bitcoin to AI. David, I believe you have some anecdotal evidence there from some research you've been doing
Yeah.
ahead of a documentary you're working on.
Yeah. I mean, just to start with, this is going to be obvious, right? The hot money, the speculative money, is kind of moved out of crypto. I think this has been a big topic on crypto Twitter for some weeks. Really kicked off by Kyle Samani stepping away from Multicoin, right? I think that it caused a lot of the VCs to kind of navel gaze and talk about what was going on here. Anyway, I've been reaching out to a bunch of Bitcoin miners in America for interview opportunities, and several of them replied back saying, "Oh, we love the idea. We love the, getting the exposure or whatever, but we're moving away from Bitcoin into AI, so it's probably not a great fit for us to be be featured on your Bitcoin mining focused piece." And that, I thought that was pretty interesting. Again, they all caveated this with saying like things like, we're not fully moving out of Bitcoin, but we are in the areas that you're looking at where we are moving away from Bitcoin into AI. So
Yeah.
this is bound to happen, right? Because this is where all the money and investment and opportunity is right now.
And it's just also a natural consequence of how Bitcoin mining works. More miners add themselves to the network. It becomes more difficult, more competitive. And when the price goes down, people have to quit, pivot, sell. That's just how Bitcoin mining works.
Yeah. Also, um, the the biggest blocker, not the biggest blocker, the biggest bottleneck in America is power usage, pretty much. And so these miners have power contracts, right? And
Right.
and so they're able to, even though they don't have any of the machinery, right, the GPUs, the thing that they do have are these pre-existing power contracts, which is really what's valuable here. And so it's uh, easy for them to make a bunch of money by
It's a
switching
big
to AI.
opportunity for them,
Yeah,
and
yeah,
it
yeah,
would
yeah,
be dumb of them to not take advantage of it. So
yeah,
it's an
exactly.
extremely natural thing happening here.
Yeah,
All right,
and like you said,
let's
Graham,
oh, go
it's a
ahead.
bear
Yeah,
market. It's a bear market things. You got to make money, so
yeah.
pivot.
All right, let's move on to a pretty interesting story here. Let me see if I can summarize the details of this. So basically, according to like a Form 13 FHR filed with the U.S. SEC, filed a few weeks ago, a month ago. So according to this disclosure, there were 8.7 million shares of IBIT purchased and held by, so valued at almost $500 million, purchased and held by a company known as Laure Limited, or Laure. I have a theory, David, that this company is has been purposely structured in this way to prevent any sort of consensus on how it's actually pronounced, as a way to further uh, kind of anonymize or uh, prevent the spreading of whatever's happening here. But
Interesting.
what that's my so this company is incorporated in the British Virgin Islands and lists a Hong Kong business address as its listed address. Beyond that, the company's director is a very generic Chinese name who no one really knows who it is. It's Zhang Hui, sort of screams anonymity.
It's like John
And
Smith or something, right?
exactly. And people online are speculating that this company, which, yeah, bought $500 million of Bitcoin in Q4 2025, uh, is basically a vehicle for people in, or high net worth individuals, companies in jurisdictions that have restrictions for acquiring Bitcoin. This is a vehicle for them to acquire Bitcoin in a like a safe vehicle. So very interesting.
Hmm. Yeah. And basically, the subtext being, Graham, correct me if I'm wrong here, is that it allows um, mainland Chinese to escape capital controls. Is that kind of the subtext?
Them and anyone else who finds it difficult to acquire Bitcoin.
Yeah, I think in Asia that would only be mainland Chinese. Okay, yeah, seems to be a decent way to do it. And
Yeah.
Hong Kong being
So
the kind of, that would be the way the usual route.
yeah. So yeah. I mean, David, this is something you've talked about a lot. So
Yeah,
looks like that's what's happening here. We're
yeah,
just
yeah, yeah, yeah.
speculating,
Yeah.
but
I'm Alex and I are actually writing a news article together that kind of touches on this whole dynamic, um, and hopefully we'll get it out today or tomorrow. But there is an interesting historical, um, his like long track record of money wanting to escape capital controls, and like various ways to do that. Crypto being adopted um, recently to kind of facilitate that. So this might be uh, like a new way to do that through IBIT shares, which is hilarious.
yeah, exactly. The most tradfi version of Bitcoin.
Yeah, 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 yeah. All right.
All right.
So
Yeah, let's
speaking of
go. Let's move
TradFi,
on to Clarity. Yep.
Clarity. I know you're really excited about this, Graham. In the pre-show, you were hooting and hollering to get an update on Clarity. I'm happy to
Just get it out
provide
of
that for
just
you.
get it over with. Let's just get it over with.
So let's do an update on Graham's favorite piece of U.S. legislation, the Clarity Act. Again, this is a crypto market structure bill that will essentially replace the regulation by enforcement modality that America has been in for the past 6 years, and it will make like explicit statutory rules, a framework that again should incentivize traditional financial players to pile into crypto, Bitcoin and crypto. All right, so let's just do a brief recap for the past year. In May of last year, the House introduced the Clarity Act. It has some antecedents. It had some different names before that, but May of last year, the Clarity Act was introduced. By July, during Crypto Week, I don't know if you remember that, they named it this thing, Crypto Week. The full House passed the Clarity Act, and so then it moved into the Senate in late 2025 and still now in 2026. The Senate is a lot more complicated. You have like different moving parts. You have the Senate Banking Committee. It began working on its own market structure approach, but this, I don't know if, I think we covered this maybe a month ago. This had some problems. This was delayed famously by Coinbase pulling support from it, right? Because they wanted to remove stablecoin yields, and I think that was the main problem. At the same time, you have the Senate Agricultural Committee is also advancing its own companion slash related market structure measure, and called the Digital Commodity Intermediary Act. So, if and when these two things get passed, they'll then have to be reconciled with whatever the House passed. If there's like very big differences, and then that can go on to be resolved too. So that's kind of where we stand now. So we have three stories on clarity. The first is from Secretary Bessent, who on Monday appeared on CNBC's Squawk Box, and Bessent, he called out two parties. First, he called out Congress, and he said, "You need to fast track the Clarity Act. Trump wants this on his desk to sign by spring." He said that this needs to happen, and it needs to happen because the lack of clarity is contributing to massive market volatility. And notably saying that the Bitcoin's sharp decline, 50% from all-time highs, this has contributed to that decline. Most interestingly, Bessent he pointed to the crypto industry. He criticized industry opposition to this, saying that some crypto firms have blocked progress, and this is very, very bad. He said it reminds him of other crypto blockages that were quote unquote existential. And he said, quote, "A group of crypto firms are prioritizing their specific business models over the health of the broader community." He called them nihilists and recalcitrant actors who would rather have no regulation at all than the current bipartisan compromise. I think he specifically is referring to Coinbase, and Coinbase's withdrawal of support of the what's it called, the Senate, the Senate Banking Committee's bill, and this is again
There's been
over the stablecoin yield issue.
yeah, there's been growing, call it criticism, perhaps, of or questioning of Coinbase's stance here. Um, People saying that no, like the Coinbase. What is the criticism, David? I don't get it. Why?
So the
Why would
criticism.
Coinbase? What like? Yeah, what do they have to gain by
So
not having this thing passed?
this is an interesting thing, and I used to think it was maybe more Coinbase's fault, but then listening to like bits and bips, I always get the name Bips and Bits. Alexander Campbell he has a really compelling point. He wrote an article on this, multiple articles, basically saying that he agrees with Coinbase's stance, which is that you cannot let the banks bully the crypto industry in this regard, because frankly they're just wrong. The banks are just wrong, and Alex Campbell, there's a great article. I should link to it. I think did I link to it in my newsletter? But the basic idea is that the banks are retarded. They're actually shooting themselves in the foot here. They the bank argument goes that if stablecoin providers are allowed to pay their users yield, you're gonna see a massive user deposit flight, and this is going to destroy small banks, but even large banks, and then banks won't be able to loan to give loans as easily, and this will hurt small to medium sized businesses and slow down GDP growth. This is the basic argument that the banks are putting forth. Alexander Campbell, he goes through this and he says, no, that they're wrong. Um, this will only grow bank deposits, and he kind of goes through it methodically, and I think he's right. I mean, it looks, it's the way I understand it as a kind of an idiot. It does seem like this is kind of how it goes, and so Campbell's argument is like, yes, you should die on some hills, and it's important to die on this one because the banks are just wrong on the fundamentals of this yield thing will help the banks, and if you let them bully this, in this way, this just wrong way, it sets a really really bad precedent. And so that's one side. Then you have Besant, right, and some of the other people on the other saying, like I just mentioned, stop dragging your feet. Any kind of clarity is better than no clarity, and so just give the banks this small win so that we can get the overall market structure bill passed. I don't know if you have any kind of like which way you kind of move on that spectrum, Graham.
Yeah. I can't get into like it's so complicated the politics like what even is the Senate?
It's a group of boomers. It's a group of boomers who are protecting protecting their control over all the value in America. That's what the Senate is.
Okay, so do we have any other
Okay,
developments
so
in this case?
all right. So that's Besant. He's basically went on trad media calling out Brian Armstrong, saying like, "Hey, listen to me, you baldy. You need to get in line." Well, that was on Monday. Well, Coinbase, they released a statement, and I think this happened on Wednesday. Perhaps, probably indirect reply to Besant going out and saying this. CEO Brian Armstrong said, "We are making good progress on high-level negotiations between the crypto industry, the White House, and major banking institutions." Again, he said the primary sticking point is the stablecoin yield, uh, citing banks like J.P. Morgan and Goldman Sachs fearing this deposit flight. And despite the lack of immediate compromise, um, the White House is trying to get Armstrong and other crypto exchanges and other figures to come together with the banks, to get something done by the spring. Armstrong said that he remains bullish on a win-win-win outcome. I guess the win-win-win would be crypto, TradFi banks, and the White House. So that's his response to, I think, Besant calling him out. I think that was kind of a milk toast response, but it shows though that he is feeling the pressure, right? Like making this response right after that. All right, so then here's the other side. Again, this is exciting to me, Graham, but I know, just bear with me. Then on Saturday, so we had Monday, Wednesday, Saturday, we had this third story. And this kind of shows you how, I think, how important clarity getting passed is for the Trump admin. They want to win. They want crypto and crypto people and crypto money to be on their side. They want to show that they can get things done. And here's the other avenue to get clarity done, even if you don't pass the Clarity Act. Okay. So on Saturday, SEC Chairman Paul Atkins and Commissioner Hester Pierce announced the launch of Project Crypto. This is a joint initiative between the SEC and the CFTC aiming to eliminate jurisdictional conflicts and harmonize rulemaking for tokenized securities and digital assets. Right? We can go into the details of what this means, but just that should strike you as being like, wait, hold on. Isn't this basically kind of what Clarity is trying to do? right? Like provide a framework of who has jurisdiction and who has control over digital assets and kind of divvying it up, making it clear for all participants. And the answer is yes. And so I've heard this for maybe a month or two. Again, on Bips and Bits, they talked about this. The Trump admin is basically, it looks like, hedging their bets on whether clarity gets passed or not. And in this case, you're just instead of waiting for Congress to get its act together, the the um, the organizations that would oversee this are gonna they can make rules themselves. And so if they make rules that essentially do what clarity the legislation would do, then you don't even need the Clarity Act. And I heard a couple people say like it actually might be better to just allow these organizations who are definitely working together, right? To make the rules themselves because they have all the domain knowledge, and they can make it again if they're working in good faith. They can make probably a better version of clarity in practice. And so you can see that you could have a situation where clarity gets stalled, but it doesn't really matter because um, parallel to this push to get clarity done, the actual bureaucratic organs are doing it themselves, which is awesome. So I thought that was cool.
I'm not sure how cool it is, but that was a very yeah, it was a really good summary. I think I learned something. Um, let's move on.
Don't don't hold back, Graham. Just let it wash over you.
To wrap it up for this week, let's do a little AI x crypto. So we've got three stories this week on that front. First of all, um, Circle Developer. So this is the builder focused division of Circle. Circle, of course, the issuer of USDC stablecoin. They announced this week that they have a new their nano payments feature is now in private beta on testnet, and it's a gas-free mechanism powered by Circle Paymaster, which allows transaction fees to be paid in USDC rather than using native blockchain tokens like ETH. And it also authorizes a small USDC. It does that by authorizing a small USDC permit, and the system handles settlement behind the scenes. Then also with this new nano payments, basically a payment can be as small as like a like a millionth of a cent. And it's saying Circle says the system is built for AI agents, high frequency settlements, streaming payments, usage based billing, and programmable commerce. So Circle trying to make moves in the AIX Bitcoin, AIX crypto space. We also have Uniswap Labs. So Uniswap Labs, the research agency or the research group behind it, Uniswap protocol, the DEX protocol, has released 7 open sourced artificial intelligent artificial intelligence skills designed to let AI agents execute core decentralized exchange operations with cleaner code, fewer failed transactions, and tighter control over slippage. All right, so Uniswap also catering to the AI agents. Meanwhile, kind of a fun story to finish off the week, David. OpenClaw has banned any talk, any mention even of crypto or Bitcoin in their Discord. Even technical mentions completely banned. Someone was actually booted from the server for mentioning Bitcoin in relation to using the Bitcoin block height as a way to measure time, which is something programmers like to do.
That was awesome.
So
That was funny.
there's a bit of a backstory to this. It's basically the founder of OpenClaw, Peter Steinberger, was harassed by meme coin scammers for weeks as OpenClaw became like super hyped around the world. the meme coin scammers were hoping to capitalize on that by having an open claw or a clawed bot or some type of meme claw open claw themed meme coin be endorsed by Peter Steinberger, and they were harassing him to the point, according to an interview with Lex Friedman, that Steinberger almost just quit, gave up the entire
Yeah,
Open Claw project completely because
just
he was being
deleted it all.
harassed so much by meme coin scammers. And so now getting a bit of revenge here, I guess, in the Discord and saying, no, you can't even mention the word crypto in the Discord.
Yeah,
So
pretty wild and embarrassing.
embarrassing. Perhaps doesn't bode well for the whole AI X crypto meta if the
Well,
word crypto or Bitcoin is banned from like the most influential agent protocol out there. But yeah, it's probably just noise. But anyway, it's kind of funny story.
yeah. I'll just do a little tease for token narratives this week, but um, I think, well, again, I wrote about it in the newsletter, so you should check that out. But I think this AI times crypto 2.0 thing is really going to kick off here. That's what I'm looking into a lot nowadays, and I think it might be the we might have like so we had that at last year, right? Very briefly, but I think now we're gonna get it. We're gonna get the second wave here. I think we're starting to build up to that. So more on that later.
Yes, a lot of people are predicting that the next wave of Bitcoin and crypto users will be agents. Bitcoin.com CEO just published last week an editorial about this. I also really liked Hasib's framing of it, in which he wrote an article a few days ago about this, saying that the crypto was never designed for humans. That's why it sucks so bad. Uh, it's scary sending a transaction. Every time you're like, what? Oh my god! Like, there's no callsy backsies, but
Yeah,
you have to like triple check all your addresses. But uh, the machines don't have that problem. They're happy to triple check every address every time. They don't make that type of mistake. So it's built. The transaction rails are much more suitable to machines than people.
yeah. Again,
But of
I
course,
also wrote
there are
about
other
this.
reasons. Yeah.
Yeah, I also wrote about this in the newsletter, and there were some good responses to Hasib's article that were complementing it with other things, saying like, yeah, it's not only on the user side that crypto was never made for people, but on the builder side, it was also never made for people. Right? Writing smart contracts is really hard, and there's lots of errors and ways to exploit the smart contracts, as the history of crypto has shown. The just the number of hacks, and moving forward, you can see that having AI write the code and probably make a lot less mistakes and check for hacks and all these kinds of things are gonna only help crypto adoption. So even on the builder side, crypto was never made for humans. So um, pretty
Yep.
interesting. Um, and you can kind of start to see some crypto times AI projects start to kind of uh, bottom and maybe buck the bear market trend. So again, there could be this could be the next big
Yeah.
narrative push, Graham.
Yeah. Maybe one last element of it, of course, is that traditional finance was not made for machines. So I mean, that's the part that people have been pointing out for a long time, right? Like that's why crypto will be used uh,
Yeah,
by the machines because they can't use TradFi.
yeah. I'm just gonna plug one more thing. Had a great like panel talk on AI in Hong Kong that we released last week with Yatsui was a part of. It was awesome guy. Great takes on AI and many of the things that he talked about. I just keep thinking about right, like to your point, how like the instant settlement, non-recourse nature of of crypto is actually beneficial for agents, right? Like the agents can't have this like T times two settlement, right? That kind of goes completely against the nature of having an AI agent, right?
It slows
The
them down.
speed. Yeah, yeah, it slows them down. Then just use a human. Then just use a human. Why would you don't need AI agents to do that kind of stuff, right? And so
Yeah.
having this kind of like atomically settled stuff that's just kind of baked into crypto is really important for an AI, not necessarily really for a human, especially when you start to get on that scale of what was coin a circle doing like nano payments, you know?
Yeah.
So yeah, yeah, very very interesting, cool
Exactly.
stuff.
All right, and we'll be here for it, covering it all, David, and looking forward to this week's token narratives, which yes, we missed last week, so we've got a lot to cover. Looking forward to
That's
that.
right.
Have a great week, everyone. See you next time. We're out.